Welcome back to Investing Talk Podcast. Today, we are going to be taking a pretty close look at iCoreConnect.
Okay.
You send over some articles and information about this company, and I think our goal today is to really just kind of like distill it down to the most important stuff.
Right.
What do you really need to know right now?
Okay.
And we have quite a bit of information covering recent stock activity, the company's background, its financial health, and then some of their recent strategic moves. We'll kind of unpack each of those to give you a clearer picture of what's going on.
That sounds good.
So let's just jump right in with the recent activities surrounding the stock price. So as of March 28th, 2025, the price was around 30 cents. But what really caught my eye was this massive 223.14% increase that was observed recently.
Yeah, that's pretty significant.
Yeah, it makes you wonder what's going on.
What's driving that?
Exactly.
Yeah.
So one significant factor seems to be a 1-for-20 reverse stock split. And that happened back in December of 2024. This reduced the number of outstanding shares considerably, from about 33 million down to just 1.6 million. And typically, companies will do this to try and boost the share price and make it more attractive to investors. Kind of like if you imagine you have a pie and you slice it into fewer pieces, but those pieces are bigger.
Right.
The same amount of pie.
Right.
But each piece just looks a little bit more substantial.
I see what you're saying, yeah. Historically, I mean, it's worth noting that when a company does a reverse stock split, it can sometimes be a signal that, they think their stock price is undervalued, or maybe they are trying to meet certain listing requirements for an exchange. But mechanically it increases the price per share, but it doesn't inherently add any value to the underlying business.
Right. Okay, so in addition to this reverse stock split, another thing that iCoreConnect did was they decided to sell off their managed service provider division, or their MSP division. So they are now fully focused on their core strength, which is the cloud-based SaaS solutions for healthcare and enterprise. And streamlining like this could lead to, better financial health for the company, more efficient operations, things that investors typically want to see. So it's almost like they're shedding that MSP division to really go all in on healthcare SaaS, which seems like a much more specialized gamble.
That's a good point. When a company divests assets that aren't part of their core business, it's often a very strong signal that they are really serious about profitability and growth in a specific area. It allows them to allocate their resources more efficiently and in the long run can potentially lead to higher margins.
Yeah. And another thing that happened recently is that Yvonne Hyland was appointed to the board of directors. And her background is really interesting. She's got a lot of experience in scaling businesses.
Right.
So her expertise could be really valuable as the company, thinks about their growth strategy moving forward.
Yeah. That's right. If she knows how to scale businesses, that means that she's able to take a small operation that's already successful and help build the infrastructure and the processes to help them grow and handle more growth.
Yeah. I mean, it's a good sign.
Right.
When you bring in someone like that, someone with a lot of experience.
Definitely. I think it gives investors more confidence in the direction of the company and their ability to execute their plans.
Okay, so to kind of take a step back and look at the bigger picture here, we need to think about what iCoreConnect actually does. So they offer high-P compliant SaaS solutions. And just to clarify, SaaS means they offer their software as a service over the internet, like you subscribe to it.
Okay.
And some of their key products include iCoreRx, which is for electronic prescriptions. Then there's iCorePDMP for prescription drug monitoring. There's iCoreVerify for insurance eligibility, and iCorePay, which is for patient payments. And in addition to all that, they have these relationships with over 100 state and regional healthcare associations. And it's worth pointing out that their services are not limited to just healthcare.
Got it.
So when we look at these partnerships they have, how do those partnerships translate into actually getting customers?
Yeah, that's a really important question. Getting endorsements from healthcare associations is huge because it provides iCoreConnect with, credibility and access to the market.
Okay.
Think of it like they're getting a stamp of approval from a trusted source within the healthcare community.
Right.
And that can help them to reach customers a lot more easily because those customers trust the recommendations that are coming from their professional organizations.
Right. Like it lowers that barrier to entry.
Exactly.
Okay, so now it's important to kind of balance all this recent positive stuff that we've been talking about with some longer-term context.
Yeah.
So over the past month, the stock has been pretty volatile. And if you look back even further, you see these pretty substantial declines over the past 6 months and a significant drop over the past year. And over the past 52 weeks, the stock has ranged from 24 cents all the way up to $5.80.
Wow.
That's a huge range.
Yeah.
It shows you how risky this stock is. And, it makes you wonder if this recent surge we've seen is really sustainable or if this is just a temporary blip.
Yeah, I mean, that's a really important question for investors to consider. I mean, it's impressive to see a surge like that, but it's definitely important to remember, the longer-term trend has been downward.
Yeah.
And that kind of price actions suggests that, there may be some underlying challenges for the company. Maybe the market just hasn't been very optimistic about them.
Right. Okay, so financially, the company reported revenues of $8.15 million for 2023.
Okay.
Which, that's slightly up from the year before.
Okay.
But they also reported a negative earnings per share, or EPS, of negative 60.90. And that really points to some ongoing financial challenges. So essentially, for every share that was outstanding, the company actually lost $60.90.
Yeah.
Which, that's not going to work forever.
Yeah.
It signals that there might be some problems with profitability or the way that they're managing costs.
Yeah.
We don't have a lot of detail on their specific debt levels, but when you see an EPS like that, it raises some serious concerns about the overall financial health of the company.
Yeah, that makes sense. While the revenue increase is a good sign, that negative EPS is definitely something to be concerned about, it suggests that they're spending more than they're bringing in, and unless they address that, it's going to be hard to keep going in the long term.
Yeah, it's definitely a mixed bag when you look at it all together. I mean, on the one hand, you have this negative EPS and stock price volatility that's a little bit concerning.
Right.
And the company hasn't been operating for that long, so it's hard to get a really good grasp on how they run their business.
Yeah.
But then on the other hand, you have this strong portfolio of SaaS solutions. They have the backing of these healthcare associations, and from what I understand, they're pretty focused on customer feedback. And those are all really positive things.
You've really hit on the key point here. They have a good product portfolio, endorsements from important groups, and that means there's market demand for what they offer. But at the same time, the financials aren't great, and they haven't been around that long, so there's a lot of uncertainty for investors and a lot of risk associated with this particular company.
Right. One more thing to consider is the competitive landscape. iCoreConnect operates in a really tough market.
Yeah.
I mean, they're going up against some really big players like athenahealth and Cerner Corporation.
Wow.
Their advantage seems to be their specialized SaaS products and those key partnerships that we were just talking about. But, these other companies have a lot more market share and they're a much stronger financial footing.
That's a big challenge. When you're going up against these big companies, these giants in the industry, you really need to have a clear strategy for how you're going to set yourself apart from them.
Right.
They need to figure out how they're going to capture market share. I mean, they've got this niche focus and some good partnerships going on, but they're going to have to execute very well to overcome the advantages that these larger companies have.
Yeah. So looking ahead, what could potentially change things for iCoreConnect? Well, upcoming earnings reports are going to be important. We'll get a much clearer picture of how their financials are doing then. Any new product launches or strategic partnerships could also be really positive.
Yeah.
But there are still risks, of course, like regulatory changes could happen in healthcare tech. And this competition is intense. So to kind of wrap everything up, while this recent surge in stock price is definitely notable, and it seems like it's linked to strategic moves like the reverse stock split and selling off that MSP division, it's still really important to remember that the stock has been volatile for a while.
Right.
And right now, their financial situation isn't ideal.
Yeah, I think this is a really fascinating example of what can happen when you combine some strategic financial moves with a renewed focus on the core business. I mean, sometimes that can create a dramatic shift in how the market sees the company, at least in the short term. But this really raises an important question. I mean, how would you as an investor react to something like this? Does this kind of event affect your investment decisions? And how much risk are you comfortable with? Because this is a great example of how things can play out. You've got these short-term reactions from the market, but then you have the long-term fundamentals of the business.
Absolutely. And if you found this breakdown helpful, please subscribe, like, and leave a comment. We always appreciate your feedback.
Yeah.
Let us know what topics you'd like us to cover in the future.
Yeah.
We'll be back next time with another deep dive.
Sounds great.